We need to get to Charlie Gasparino because, Charlie, I don't know if you just heard me say this, but the third most active stock on the big board is GE, which is down about 1%. You know this. It's this, part of the story perhaps is that the Leviathan is picking up its roots and moving. You had broken this story, moving from Connecticut to Boston to Massachusetts.
I know, it's pretty amazing. Remember we talked about this last week, 2 weeks ago, that why would they move there and not stay somewhere in the area? I mean, listen, it's a much more growth-friendly state, and they have a Republican governor. They have infrastructure that I think Jeff Immelt, the CEO, likes. They're in the middle of there's schools there, there's technology there. It's all the stuff that Connecticut doesn't give you, including a more favorable tax environment. And that's
Which is
why,
stunning, Charlie.
GE
They call it Taxachusetts. I lived there for 3.5 years.
They used to. They don't anymore.
They fixed it, but isn't that amazing?
It's better than Connecticut, and it's a lot better than New York, and this is a huge corporate story. Listen, the markets are going to be huge, and I will say this. I heard some of your guests talking that, is it going to end lower today? Today is not. Today is going to end up, we're down 300 points. Here's the reality of it, and I said this on your show yesterday, Liz. This is the bear scenario, and it's starting to bear fruit, so to speak. Problems in China spreading globally. Slowdown in the U.S. economy, which economic expansions last 7 years. Too strong of a dollar. Oil prices keep going down, which have a negative impact on those stocks and employment from that sector. And consumers still scared about 2008, so they're not taking that money that they save from lower gas prices and spending it. Right. Plus, on top of the fact that the headline unemployment rate of 5%, none of the sophisticated investors I know believe that to be a real number. They think the real number is in labor participation and these other issues, which point to much more weakness in the Dow, in the economy.
The S&P is down 44 points.
It's just amazing.
That's pretty stunning. And I also want to point this out because it's a little bit not that we take pleasure in anybody's demise, but a victory lap on the Twitter story, which Monday, Charlie and I, so you guys know how this works, we often talk to each other in the morning and say, what should we be doing? What should we do at 3? He always breaks news here at 3 o'clock Eastern time on this show. We said, let's do Twitter. It is dropping, and sure enough, it is now below $19, and it looks like a takeover target, maybe.
Now, why is Twitter dropping? Let's be clear here. All these tech stocks were overpriced. The hedge funds right now, and this is what was leading the market in many respects. This isn't a puke. Remember I said a puke? It's not quick and out. This is going to go on for a while, and and I'll tell you, if you're an investor right now, you really seriously have to be thinking about cash. I don't care. I don't recommend. I'm not a CPA. I don't go out there or CFA, whatever they're called. I am telling you, you have to worry about being in cash. This could last a long time. This could be a long move down.
Charlie, thank you. Others might say don't sell into a dropping market.